Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 19th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It being a Tuesday, I hope everybody had a great holiday on Monday, which was President's Day. Today, coming out, not a whole lot of economic data today either. So yesterday, bank holiday, no economic data. Today, not really anything to look at. Later on this week, though, Wednesday, Thursday, Friday, we have some good economic data coming out. Keep in mind that crude oil inventories, because of that holiday, is going to be released on Thursday rather than on Wednesday. But we got some flash PMI numbers coming out of the European region, which is the number to look at on their PMI numbers. All right. Other than that, also today is, yes, the 10th anniversary of the Tea Party. And I don't know if you guys have all seen this, but little cameo. So anyway, it is the 10th anniversary of the Tea Party movement, that rant heard around the world. That being said, we've got a lot going on today with markets kind of juking. I don't know if it's really based on that, but gold really moving higher. Thank goodness I got out of that GDX last week, because GDX, GDXJ, and gold really popping today. Really bucking what I thought was going to happen here. I don't think that we're seeing this type of economy to really drive this gold higher. I think that the economy, we were seeing a bit of a trough or a slowdown, but it seems like, at least at this point, maybe we're starting to get a little bit on the upswing for the macros on the economy. So, we saw that lull. I saw it coming. Now we're starting to see some of these levers and pulleys start to click a little bit better than I was kind of expecting, more of a slowdown. But it seems like we're starting to turn around just a little bit. Gold making a move that is surprising nonetheless. Crude oil, obviously, had that chart up early. And let me pull that up again just to make sure we go over it. And crude oil is pretty much unchanged on the day, starting to get a little bit toppy. Now, remember, I talked about this. I think that it's mid to lower 50s is where we should be. We've gotten a little extended, gone up and tested the value area high. I think we're going to roll back over right in and around to that $52 range. Then moving on to the bonds. Bonds are moving higher today, but again, they need lower interest rates to really start driving higher. If they keep interest rates in and around where we are for 2019, I don't really see bonds being able to make a big move. I think that some of the economic data showing up will take away some of this easing prospect out of the bonds and notes. VIX slightly higher on the day, although it looks like it's low. It's lower than we were when it opened. It is still slightly higher on the day, and we still have the teens to hold on to. Although, across the board, we're seeing equities with really low implied volatility percent, based on the fact that we got that big, huge spike back in September, October, and even into November, where we saw volatility really spike to the highs. A lot of these companies had 100% IV, not around in earnings, so it was even higher than what we normally see around those binary events. That's going to make it very difficult to get above an IV percent of 50 right now. So, it is basically going to the bottom of the list, the lowest implied volatility percent, and looking for opportunities to do premium buying or premium buying strategies where you're laying out premium buying option strategies, I guess. Better way to put it. We got the NASDAQ moving slightly higher today, only by a few points right now. That could be taken away in a matter of seconds, so we could call it unchanged. E-mini S&P slightly negative on the day, but again, we could almost call that unchanged. That could be made up in a matter of moments. thing to note here is how this chart ends up. You know, we talked about this continuation pattern, or was it a topping pattern? It ended up being a continuation pattern. Now we're pushed up and above. It looks like we are going to test this Fibonacci high here and start to move around. I remember had the IWM trade on. I ended up just closing it out because of the way the technical set up on Thursday. The market started spiking, remember, and even into Friday. This is the Thursday move, and then Friday we got that massive spike. I was hoping we'd get a little bit of continuation to the downside. Didn't happen. So my IWM hurt a little bit. So let's talk about that right now with that big move higher yesterday. On Friday, that's when I got out of this trade for IWM. And I went in there and had originally sold the February 152 calls in there. There was a delta adjustment for my portfolio. All the other things kind of worked out. Left this in there a little bit too long. It never really got 50% of my max profit. But, you know, having said that, the market started moving against me, and I finally got out when this didn't work out. It went right back to the point of control, which I expected. But then, you know, right there on Friday, we got that spike where the money pushed it out and away from that 152 handle, probably because, you know, they have a position on that they wanted to settle at a specific level, and that was not at or below 152. So they drove that higher. I originally sold that trade to get out, or sold it at 68 cents, bought it back at $3, and I got to check my notes here. It was like $3.35. $3.60. So out of IWM, took that off on Friday, headed into the weekend. I didn't want to take in a short position. They were short calls. I would have been put that underlying as short. So I don't want to deal with that. TWLO is a trade that I'm playing to the upside in here. So went into the longer duration, right? We usually talk about shorter duration, the near expirations for short premium selling strategies. Now I'm all the way out into the May. It doesn't seem like it's spring, right? But we're into the May contracts. And TWLO, I went into that May and bought the 120 calls in there for $9.20. I'm looking for it to go up and make a new high. They came out with decent forward guidance, and maybe not necessarily doing so well on their earnings, but forward guidance was really good. So I'm looking for this to play to the upside and at least go up and test that high for me to be able to get out of it. And then finally, last trade that I put on is IBM. Again, playing this to the upside, and went into the May again and bought the 145 calls in there for $2.70. Looking for that market to go up and at least test the point of control after the nice beat on earnings. Market momentum seems to the upside in across the board. So I think that IBM is going to do well for that and migrate higher, at least to the point of control. So that's what I'm looking for. Last thing I'm looking at right now is McDonald's, and it's getting away from me. I thought it was going to get pretty close today. I was about 15 cents away from that in McDonald's. Doesn't want to work for me, McDonald's. So it was spiking higher. It was really nice. So I put in a offer to get out at $1.50 because I have on the April, and I am long the 190 calls in there. I originally paid about 72 cents for it. I'm trying to get out for $1.50. The highest I saw, I think, was $1.37. Trying to get out of this both in my IRA and in my margin account. One thing I forgot to mention, TWLO and IBM, I did throw into my IRA account as well as my margin account. So, and I'm trying to get out of McDonald's, out of both my IRA and my margin account. And that's it. That's all I've done so far. Keeping an eye out. Nothing really for earnings tonight or even coming out tomorrow morning. Just keeping a vigilant eye on some of those because I've got a lot of money sitting on the sidelines that I want to allocate towards that rather than a bunch of premium buying strategies. So If you see anything out there, give me a shout out on Twitter at Wolfman's blog. Would love to hear from you guys. And if you got a trade idea, I'll be happy to take a look at it. All right, that's it. That's all I got for you guys. If you can't take that, take it easy.